Right. Hi, good afternoon, everybody. Welcome to the Trading Setup channel. My name is Niku, and we're going to be doing some trading today. Um, in today's video, we're going to be looking at the alligator indicator. The alligator indicator is a trend indicator, which helps us to locate trends. Knowing when the market is trending and when the market is ranging gives us an advantage. In the sense of if the market is strongly trending, we know we can go in the direction of the trend, and when the market is ranging, we know that we have to be careful and not take trades expecting the market to move while it's ranging. So today we're going to look at the alligator indicator, what it's made up of, what it is showing us. And then we're also going to look at 4 different ways we can use the alligator as part of 4 different strategies to find entries in different market conditions. Okay, so guys, first off, before we kick off, I hope everybody is enjoying the festive season and that you guys are slowing down and starting to relax a bit. Christmas is upon us. We are 6 days away from Christmas, which is awesome. So yeah, hope you guys enjoy it. With that in mind, as always, those of you trading with PO Broker, I have a promo code for you guys for an 80% deposit bonus from as little as $10. That code is on screen, Alligator 80, and if you need to make use of it, do so. This is only available for the people that's viewing the stream. So yeah, okay, let's jump into it. So before we can use, as always, before we can use any tools, we need to know what these tools does, what they are made up of, and what data they are showing us. Remember, any indicator that you use on your chart, you need to understand that it's showing you specific data. And if you don't understand or don't know what kind of data the indicator is showing you, you will not be able to use the indicator efficiently, and most of your trades will be based on guesses, and guessing is a bad strategy. So what is the alligator made up of? The alligator is made up of 3 smooth moving averages. These are simple moving averages. Traditionally, it consists of a 5, 8, and a 13 period smooth moving average. So we talk about the 5 moving average. We refer to it, it's called the lips. The 8 moving average is called the teeth, and then the 13 is called the jaw. Right, so these moving averages are smoothed. They're not just plain moving averages. So the 5 period moving average, which is the lips, they are smoothed by 3 candles or 3 bars. The teeth, which is a 8 period moving average, is smoothed by 5 bars. And then the jaw is the 13 moving average period, and that is smoothed by 8 bars. Okay, so it's a smooth moving average, and we're going to be it's showing you average direction in a from a 5, 8, and 13 period. One of the most popular ways that we use it, there's 3 different states, 4 states of the alligator. The first will be sleeping. We refer to sleeping when the lines are convergent or when they're intertwined. That's when the market is ranging with no clear trend. We'll look at a few examples in just a minute. The second state is waking. That is when the jaw, the lips, and the teeth starts opening up. And this is, I suspect this is where the name alligator comes from, but it starts opening up, and you can imagine an alligator's mouth. They lie in the sun the whole day with their mouths open. So that is what it looks like. So that is the waking moment. Then we've got the feeding moment, or the feeding period. That's when these lines are already open, but they're opening more, right? So it's like it's going to take a big chunk of something, big chunk of food. And then we have the last period is where it's is I believe it's called resting as well. That's when the jaw starts closing. Okay, so that's we've got sleeping or ranging market. We've got the breakouts, or the start of a trend when it's the waking period, when basically the mouth starts opening. Then we have the feeding period. That's the when the market is in a very strong trend. This is ideal circumstances for traders, is when that mouth is really open and the market is moving in a strong trend. You will remember a lot of my previous videos that we did here covered a lot of continuation trading. Okay, so that's what we say when we people love to say the phrase "the trend is your friend." I'm not too fond of that saying specifically, because a lot of people don't really understand what it is. But there is an advantage of recognizing a trend and then looking for ways to to find entries on that. And a lot of the strategies we've discussed in previous videos are based just on that strong trend, and we're looking for continuation. Anyway, so those are the four states of the alligator. And like I said, there's there's a couple of strategies different ways that people use it, but there's four main strategies, and we're going to be discussing those today. So, without any further ado, as always, let's go to the charts, and then we look at a few practical examples, and we'll also look at the four different states of what it looks like when the alligator is in those states. Okay. On my main chart here, I've got the alligator loaded. This will be, the green line will be your your lips, or the 5-period moving average. The brown line here is the teeth, and that's the 8-period moving average. And then the blue line would be the jaw, and that's the 13 moving average period. You can adjust these if you feel like it. If you want to play around a bit, see what it looks like if you adjust the different settings. I would like you to note, though, that the difference in the periods is tied to the Fibonacci number. So if you want to play around with it, try to kind of stick to those ranges. But you can make it whatever you want. The default settings, this indicator was developed by Bill Williams. So this is the way he used it. This is the way it was designed. But you can, change around with some of the settings and so forth. Okay, so different states. This will be a sleeping period where the lines are intertwined and there's no clear direction. The lines are crossing the whole time, but they're not opening up really. Okay, this is a waking. This is what we call the waking, where we were sleeping for a bit, and then, as we can see, the market was ranging in here, and then we had a breakout here. Okay, so when the breakout happened, the jaw started opening up, and then as we progressed along the trend, these lines really started opening up quite a bit, and that would be the feeding period, or what's the word? And then this will be where it closes again, where the market goes into a range again, or the alligator, the moving averages are intertwining again. Okay, so one of the most common ways to use the alligator is using it as a breakout strategy. For this, we're going to be using, you have to excuse, there's a bunch of indicators loaded on my chart as well. We're going to use each one of these for a different strategy. I just loaded all three of them because it makes it easier for us to save some time between loading different indicators while we're doing the stream. The breakout strategy would be using the average true range. So what we're going to look for is areas like this, where the market was ranging, and then all of a sudden the alligator opened up and the market broke the range. We can clearly see here. Let's draw this in here. Okay, so we were ranging in this area. Price kept hitting this area here, this level there, and kept failing, and the alligator closed. But when it broke through, the alligator jaw started opening up. Remember also that this is a trend indicator and it is a lagging indicator. We do not take trades simply because the lines cross. We do need this. This is one of those indicators you definitely can't use by itself. All right, so keep that in mind. We cannot simply take trades when the alligator just starts opening. You're going to get a lot of false positives like these, and oftentimes, because it's a lagging indicator, this by the time you take the trade on the cross, it's going to be too late, and we could be in a, like, this is a perfect example of what a range looks like and how a range would have nailed you if you were trading crosses. Let's just do that. Okay, so if you just want to trade the crosses of the alligator, by the time these cross here, even on the first cross, and you go for a sell, the market is already turning. Same would have happened here. If you took a sell, the market was unsupported and it got pushed back. Okay, so please don't use the alligator by itself. It is a great tool when combined with other indicators, but it's really not something, because it's lagging, you really can't use it by itself. Anyway, that being said, so when we had the break, the breakout here, when the alligator started really opening up, we can see that the average true range started climbing. When this happens, we can go in the direction of the break. Okay, so we want to look for areas where the market is basically, where price is ranging, and then the breakout will be once we identify that the alligator is opening up, that the mouth is opening up, and when this happens and our average true range starts climbing, we can go in the direction of the trend. That confirms to us that the trend is that a new trend is being established, and we can just go along with it. Okay, so that's one way to use it, and this is one of the most popular ways that people actually use this. We can look at this. We might actually have a nice setup here forming. We'll keep an eye on this. So what we have here is that the alligator started opening up. We are still very much in a downwards position, but we might see a breakout here. If my ATR my average true range indicator starts climbing now, we can go in the direction of the trend. If it does start climbing, we know that we are probably in the beginning of a new bullish trend, and we can just take a trade in the direction of this trend. You do have to wait for it to happen, though. We can't we don't predict anything. I've said numerous times before, it's impossible to predict the market. So we cannot predict what price is doing, but we can follow what price is doing. So we just need to wait and see what is price doing, and once it shows us that it is going into a trend, we can take a trade in the direction of the trend. But we do need to wait for price to show us that it is actually moving upwards. At the moment, it's really struggling to break this level. We are in a downwards move. We can actually, let's draw this in, make this a bit more clear. So first we're going to get a level line there. Okay, so that was the first obstacle for price, and the second obstacle would be kind of there. If we draw on, let's move you there. If we draw a trend line off that hook there, this could be very well be a fake break as well. Okay, my ATR is still very low, so I'm not going to risk this is not the time to risk taking a trade simply because the alligator has crossed. As I said earlier, it's not a very good indicator to use by itself, but it's brilliant to show us. Um, it's a brilliant indicator to find, especially the beginnings of trends, and also to identify market ranges, but especially the trend part of it. Um, Once you have a well-defined trend or a well-established trend, it's very easy to just wait for retracements and then find ways to enter or reasons to enter the market on those retracements, and then just continue with the direction of the trend. So yeah, and this is a good example why I say we have to wait for indicators to show us that this is actually happening. At the moment, we are still very much in a market is still ranging. There is no solid direction at the moment. There is no solid trend at this moment here. So we do have to wait for our indicators to show us if the ATR, we do, in this case here, specific case, we have to wait for the ATR to start climbing. If it doesn't, we cannot take the trade. Okay, while we wait for that, let's look at the second way that second strategy to use the alligator with. For that, for the second strat, we're going to use the RSI. So basically what we're going to be looking for is we're going to look for areas where the RSI is either bullish or bearish. This will be areas where if the RSI is moving above the 50 line, its price is considered bullish, and if it's moving below the 50 line, price is considered bearish. So if we look at areas where the RSI, where we find crosses, where the RSI is bearish, in this case, we can see here that on the cross, when the alligator crossed downwards here, even though it was ranging, when the RSI, when the alligator crossed downwards, my RSI has been bullish, bearish already, and we could have taken a 5-minute sell here on that cross there, because my RSI confirmed the direction, it was bearish. Same way actually that this is at the moment. We had the cross, and my RSI is still very much bearish. We should actually be able to take a trade here, but I still don't like it. We still haven't broken the resistance level here. I'm just going to wait for that, but I suspect we're going to see a trade in the near future. We should get a buy trade here. Okay. Another thing to keep in mind as well, because the alligator consists of moving averages, these can also be used as dynamic support and resistance areas. And you're going to see this happen quite often. This was a great example where price came back and it just retested the support line there of the lips. At the same time, my RSI remained bullish. I'm going to ask you guys to excuse me 1 second. The gardening services of the place that I live in just showed up. And they're going to start walking around past my window pretty soon with lawnmowers, and I just want to close that window so we don't get disturbed. 1 second. Okay, sorry about that, but it's going to be would have been a lot worse if they came past with those big lawnmowers that they have. Okay, so trade played out. This was a buy trade for us. I missed this now, so this sucks. Anyway, the alligator can be used for dynamic and support and resistance areas as well. And quite often, when this when price breaks and it comes back to retest the alligator, you will find that this happens. With the RSI, for example, after the break, the RSI went bullish, came back to retest the alligator, and the RSI just bounced off the 50 middle line and continued to remain bullish, bearish if it's below. And these are excellent areas to take new positions. In this case, a buy trade. So yeah, another way we can use this, another way that the alligator is, people like to use the alligator, is using it alongside the MACD. We did a video, I think last week we did the video on the MACD. So again, we need to find an area where price is trending. Once price is in a trend, we can look for, here we go. Here's an example of how we would use the MACD. We had a bullish movement here. The MACD line was above the signal line. It dipped below in this area here, but the alligator remained bullish. The alligator still was opened upwards in a bullish position. And once the MACD crossed upwards again, that would have been a signal for a buy trade. So whenever we have MACD and signal line crossings, if they cross while in the direction of the alligator, we can take that as a buy signal in the direction of the current trend. So whether the alligator is showing us bullish or bearish movement, we can go in that direction if the MACD crosses opposite and then in the same direction again, like this example here. So price came, basically this was a very long correction. We had the push, price came back, but it ranged for quite a bit. So the MACD crossed back down. You will also notice that during this whole period, my RSI remained above the 50 middle line. Something to take note of. But once my MACD dipped below the signal line and crossed back over again, while my alligator remained bullish from the time it crossed downwards to the time it crossed back upwards again, that's my signal to take a trade in the direction of the trend. This will also happen in downward moves. Let's see if we can find, oh, there's a nice example here as well. We had the MACD, the alligator trend was going strongly here. Price dipped down here in this area here. It dipped below the MACD again. The MACD dipped below the signal line. And once it crossed up again, that was the candle where that candle, okay, so let's say that candle. If I took a 5-minute buy there, it would have been a good trade for me. Okay, so we can look for areas where the MACD goes, where the MACD and the signal line crosses and then crosses back in the direction of the alligator. We're going to take the trades. We will never take the sell there when the alligator is looking like, in such a strong bearish move or bearish position. We will not take the downwards cross because that's not a sell. We're going to, that's the chances of winning a sell is very, very low. But if it crosses back upwards, we do have a very decent chance to actually win the trade that we take. So that's also another strategy, way that people use it. I just want to see if we can find a bearish example. I don't like this one. This one not so much because it's the lips already crossed the teeth there. Okay, here's a good example. So we were bearish. This was a massive drop this morning or last night. But the alligator remained bearish. We were in a downwards move. MACD crossed upwards and then it dropped again below. The MACD went below the signal line again. So we could have taken a sell here, either on this candle or on this candle. We could have taken 5-minute trades. They would have been good. And then also this was a very faint signal here, but it did cross upwards for a second and crossed back on the very next candle, and we could have taken a continuation trade there. More motivation for this would have been the fact that the RSI was well below the 50 middle line, and also my ATR was climbing. My average through range was climbing, so telling me that there's momentum behind the move as well. So yeah, that's the third way that we can use the alligator to find entries. Missed another one while I was busy in the history. But it's fine. It's fine. Average through range is starting to climb. My MACD is going, looks like it's going to go bearish. We've got the histogram slowing down. The lips of the alligator is leveling out at the moment. So it looks like they're going to level out. Let's just see if we might, maybe we can get we'll get an entry with the MACD in a minute or two. Okay. Lastly, the way that we can use the alligator as well, or the last way that we can use the alligator, which is one of my methods that I like, especially on the short periods, is finding areas where price is actually ranging instead of areas where we go into a trend. And for this, we use the the ADX. Anybody that knows me knows that the ADX is one of my absolute favorite indicators. Let me show you guys how I use this on a short term. One of the ways that we can use this on a shorter term chart. So what we want to do is we want to identify areas like this where the market is ranging. Then what we're going to look for is ADX spikes. Actually, I should phrase that correctly. We're going to look for DI spikes. Let's change the colors here. Okay, so we're going to make the ADX yellow. My plus DI, we're going to make green, and we're going to make DI minus, we're going to make red. Okay, so when the DI minus is dominant, we're moving downwards, and when the DI plus is dominant, we're moving in a bullish direction. So what we want to look for is in areas where the market is ranging, and we can identify these areas using support and resistance like this. Let's move this one here. Okay, so we can clearly see that this is a very strong level. Always remember, support and resistance will never just be a single price. It's always an area. Okay, I explained that last week in the video. So this area will be, let's duplicate this quick. Okay, so that will be the support area, the area between those two lines there. All right. Once the market goes into range, you can, once this begins, you can actually start drawing in your support and resistance. In this case, we would have drawn it like this because this was our low point here. What we want to look for is areas of the where the DI spikes. We can put this, for example, also on the most recent last low. We can look for areas where the ADX gives us spikes. The ADX is really effective in ranging markets, especially the DI spikes is effective in ranging markets. So what we want is if we get a very big DI spike with a relatively low ADX, it tells us that the market isn't trending. And these are the areas where I want to take reversal trades. Okay, so if we look at where this this big green candle here, or this big green spike here, if I took a sell there for a minute, it would have been 1, 2, 3, 4, 5, 6. It would have closed here. So that was a good trade. Same goes for the DI spike on the red candle, which was close to my support. Would have been 1, 2, 3, 4, 5, 6. Depending on where I got in, should have been a good trade as well. Okay, so there's 4 ways that we can use the alligator to find entries while trading. It's very important to remember that the alligator is first of all, it's a trend indicator, and secondly, it is a lagging indicator. Okay, so it's very important to know that it's really not it's not an indicator we can use by itself, it's a pretty bad idea to use this by itself. Um, there you go. Okay, so but it's a great indicator when we combine it with other indicators. Um, and you're not limited to the strategies we discussed today. You can use even more indicators or even more different indicators. There's so many possible ways you can use this. We just looked at four of the more popular ones today, but there's a lot of ways you can use this. So you can play around with this. If you have let's say you're using other indicators for whatever strategies you're using at the moment to trade, and you want to add the alligator to your charts, do that, and then try to see ways that you can combine your current indicators with the alligator. Now that you understand the different states of the alligator, the way the moving averages shows us where the market is ranging and when the market might actually be starting a new trend and so forth. Once you understand that, it's actually pretty easy to start looking at other indicators that you might be using. Suppose you're using the stochastic as part of your trading strategy. There's definitely ways you can use the stochastic as well with the alligator. You can use the CCI, you can use I almost wanted to say the ADX, but we covered the ADX just now. But there's a lot of different ways we can use this. Especially any momentum indicators. Momentum indicators is a great supplement to any trend indicator. Because trend is going to show you direction, and then the momentum indicator will show you how strong that movement is or gets as it goes along. The stronger a move gets, the longer it will take to stop, or the more the more momentum it has, the more time it's going to take to stop. Those guys just passed my window. I do apologize if there's any noise seeping through. I'm really hoping my mic is catching that noise, but I'm really sorry about that. Anyway, okay, so that covers the alligator. Yeah, it's just really important. Like I said, the main thing with the alligator, and I've seen a lot of people try to use the alligator, play the alligator crosses by itself, and it's really not a good idea. Test it for yourself. Go to the charts, open up a spreadsheet, and just keep, just backtest a little bit and see how it would go if you just play the crosses, and then look at the different strategies we discussed today. If this looks interesting to you, feels like something you can use or want to try out, always just test it first. Don't just jump in. It's never a good idea to simply start trading with this untested strategy. And untested means tested by you, doesn't mean it will never be tested by somebody else saying something. If you don't have access to the actual test data, it's invalid. Your opinion of it should be that it's invalid immediately. There's a lot of people there outside there that's just like misinformation and with horrible data, and please don't use anything, even if you know there's a lot of people that's sends me messages and stuff. A lot of people trust me, but it doesn't matter. If anything is new to you ever, doesn't matter where you hear it from, please test it first. Test it on demo, back test it a little bit, see if you understand it and trade it. Please don't just jump into any strategy ever, just blindly. Okay. All right, so unfortunately we didn't get a lot of trade opportunities while we were doing this video. It is holiday season, So the markets do slow down a bit. Traditionally, when I say slow down, we see a lot of increased volatility on declining volume during this time of year. So please just be extra cautious when you take trades. It's still possible to trade. Just be a little bit extra cautious. Okay. And then just a reminder, those of you with Pure Broker, there's your promo code again, Alligator 80 for an 80% deposit bonus on a deposit from as little as $10. Okay, guys, that's it for today. I'm gonna do another stream on Monday. So hopefully see a bunch of you there, and then yeah, we'll take it from there. As always, trade smart and trade safe. And until next time, enjoy the festive season. Wishing good fortune to you and all of your loved ones. And take the time to enjoy as well. Take a break from the year and just enjoy everything for a week or so. Right, until Monday, cheers.